Good morning, traders. Richard here in a quick Ichimoku cloud chart and artificial intelligence trading review of NVDA. We'll also look at the StarMine institutional trader data rankings to get a big picture review of the fundamentals and quantitative valuation. But let's kick off with the weekly Ichimoku cloud. Nice steady uptrends now since April 2025 after NVIDIA rebounded from the bottom end of the cloud. Strong rally consolidation period, strong rally consolidation period, and we're once again in that consolidation period. Now if I zoom in here, we can see we're fighting for support there at the turning line of the Ichimoku cloud. The other major support zone is the Kijun Sen, which is the standard line of the Ichimoku cloud, as well as the bottom end of the front end of the cloud. So these are significant support zones for any kind of potential rebound. Let's say the results come out tonight and tomorrow morning the stock snaps down to that zone, and then we could see that as a swing trade rebound entry. It's building somewhat of a cup and handle chart pattern here, which is encouraging to see, but do remember there's downside risk to these two levels, the top end of the Ichimoku cloud, the standard line, and the top end of the Ichimoku cloud. So keep those as the downside risk levels for September and October so far. Now, great chart, strong uptrend, prices above the Ichimoku cloud. That's bullish. Just watch out for that continuation of the rebound from the turning line of the Ichimoku cloud. Now the daily is more useful for us swing traders here. We had a fantastic rebound from the standard line of the Ichimoku cloud. This comes soon after the stock rebounded from old cloud chart support levels here. Let me just put that zone in. You can see that was a beautiful accumulation zone. Every time it gets to this major support zone of June, that was also a nice rebound there. Strong rebound there, managed to break through the top end of the Ichimoku cloud, then ran into trouble at these old high resistance zones there. You can see it met a little bit of resistance there, consolidating, pulling back to the top end of the cloud, fighting for support. They did dip in there and rebounded from the standard line of the Ichimoku cloud. So far so good. We've got our rebound there. Now just if the results are good, exceeding expectations, we'll have a nice strong rally from this top end cloud chart zone, and then make another attempt at that 227 resistance zone. If the results come out good, but the guidance is not so good, then we're going to probably see the bottom end of this Ichimoku cloud and test that zone for support. As long as NVIDIA stays above this bottom end of the cloud, it remains bullish. Any price action below the cloud is ultimately bearish, and then you'll have to look for major support zones to swing trade back into NVIDIA. But so far so good. We got a rebound from the standard line of the Ichimoku cloud there. And on the 4 hour, let me just see, 4 hour one, we had a beautiful rebound once again. You can see how the old cloud chart support levels come in handy. A nice rebound rally there, only to be running into resistance at the top end of the Ichimoku cloud, and then another rally there, and we managed to get past the top end of the Ichimoku cloud, and then that resistance target was met. And then the next one was these old highs there once again also came into play. Then consolidating back to the cloud, fantastic rebound at the bottom end of the front end of the cloud. You can see how these levels are critical to watch out for, the front cloud support zones, and there was a nice swing trade on the back of that. Now watch very closely the results. Are any negative surprise in the results, so we could see a 5-6% gap down, and then we're going to be back in bearish territory for NVIDIA on the 4 hour. But so far so good. Nice little rebound rally. As long as price action stays above the bottom end of the Ichimoku cloud, the rally's okay. Once again there, watch out for any kind of price action below the cloud there. The bottom of the cloud, yes, major support zone, but so far so good, rebounding from the standard line of the Ichimoku cloud. Now looking at from a Fulgent AI engine, artificial intelligence signals there, we've had a few really great ones here. If I look back here, this volatility breakout signal back here in November, you had to be very patient. It eventually did pay off. And yeah, we've just had another one with the Fulgent AI trailing stop loss at 197. So far so good. Another volatility breakout signal there for the swing traders among us. And NVDA on the 4-hour also had a nice one there in July, and we now also had a nice new one with the Fulgent AI engine sitting at 202 as the trailing stop. Next up is a deep dive into the StarMine data rankings. The StarMine models, these models looks at hundreds and thousands of data points, and these are percentile rankings, meaning the higher the ranking the better, the lower the ranking the worst. So we'll start with all models, and some of the most prominent one I'll just briefly discuss. The earnings quality is a percentile rank of 82, so it is in the top 30% of the market where we ideally like to see a stock. If this was above 90, it would be preferred, but so far so good. The earnings quality rank is where StarMine digs deep into the income statement and balance sheet, line item for line item, and look at various fundamental factors that are predictive in nature of the stability of a company's earnings growth. So there we go. So we got to take comfort in the fact that the quality of the balance sheet and income statement is there. We also can take a bit of comfort that the credit risk combined ranking is 98, so there isn't really much credit risk at this stage in NVIDIA. So those rankings are quite high. The combined alpha model, which combines valuation momentum and a few of the other models into one overall total rank, is 82, so it's in the top 20% of the market. So we do like that from a combined alpha model perspective. The only drawback here is the relative valuation and the price momentum score and valuation momentum score. These are quite low. You can see here on a global rank, where does NVIDIA rank in terms of valuation globally? So you can see it's quite in the bottom 30% of the market there, and a lot of factors there, particularly price to cash flow, bottom 29 percentile ranking, EV to EBITDA bottom 30% ranking, PE ratio 38 times, 38 ranking there on a global basis. So it's quite a high risk stock from a valuation perspective, but we do like the earnings quality. That's the combined alpha. Short interest is low, but the insider selling remains significant. So the insider percentile ranking is the bottom 4% of the market. So the insiders are net sellers of NVIDIA and not net buyers. So there's a lot of detail that goes into that insider ranking. So that is a significant risk factor to bear in mind. Analyst revision score is a percentile rank of 83, where we track the most accurate analyst estimates, and we see are these analysts improving their numbers and revising the numbers to the upside. So there's some good momentum in the earnings valuations to the upside. And if we just scroll down, we can see for the July quarter, the StarMine predicted surprise is 1% on the earnings beat and a 0.9% on revenue. So they do expect a slight upside surprise in the earnings growth for NVIDIA. And the year-over-year EPS growth, for April, let me just get there we go. April 26th quarter was 130%. The smart estimate for July quarter is 101%. And then for the third quarter 2027 there, 2026 we've got 87% growth there. So we can see we're still high growth rates, but slightly deceleration on a year-over-year basis. So there is some risk in the earnings expectations for NVIDIA. Now, the thing to remember is there's some interesting things we can do with the StarMine model. It does a reverse discounted cash flow and tells you where the current stock price implies what type growth rate for the company. So you can see the market implied growth rate is about for 18% earnings growth in 2027. And so over the next couple of years, and then the smart growth is 18.6. So the market implied growth rate is very much in line with what the analysts expecting. So the expectations are very much in line with the market implied growth rate. So we can see any kind of significant upside surprise would really give the stock a boost. But that's a very nice calculation that they do a reverse discounted cash flow where you input the current stock price and it gives you an idea what the current growth, what the growth rates in earnings the current stock price is implying. That's just kind of one of those roughly on the back of the envelope calculation. But so far so good. We like the combined alpha model there, from a bull and bear case. Analyst revision score is high, short interest is low, earnings quality is good, credit risk so far looks okay. It's just that the insider relative valuation and price momentum score is a bit on the low side, so there is some significant risk in the valuation side of things. But back to the Ichimoku Cloud, so far so good. If I just look at the daily one there, keep a very close eye on the price interaction in and around the cloud here, as well as are we going to retest that standard line there for a potential rebound. But so far so good, still trading above the bottom end of the Ichimoku Cloud. So keep a close eye on those numbers coming out tonight. Until next time, happy cloud chart and AI trading. Bye for now.